5 trending TradingView indicators ranked from lowest to highest using our scoring system. These are our opinions. You decide if they're worth it. Next candle predictor. Created by Predictor Futures, this Pine script indicator attempts next candle direction forecasting through weighted confluence scoring of 7 technical indicators. The scoring engine assigns percentage weights across trend alignment, MACD momentum, volume delta, RSI positioning, stochastic crossovers, ADX strength, and volume ratio. Each indicator receives scores from 0 to 100 based on condition strength, which multiply by weight factors to produce composite long and short scores, summing to 100%. The custom supertrend calculates upper and lower bands using ATR multiplication, flipping direction when price crosses the opposite band. Volume delta splits each candle's volume into buying and selling components based on close position within the range, then compares against its 10-period EMA. Long signals require positive delta, and short signals need negative delta. The 8-point confluence system requires minimum alignment across trend state, EMA positioning, stochastic cross, volume threshold, ADX exceeding 25, RSI above, below 50, and delta direction. Users configure minimum required points, defaulting to 5 of 8. Volatility regime detection uses ATR percentile ranking to apply score multipliers. High volatility reduces scores by 15%, while low volatility boosts them by 15%. The projection visualization draws future candles size proportionally to long and short scores, with height scaled by current ATR and volatility multiplier. Real trading centers on waiting for perfect time signals, combining high scores with full confluence and delta confirmation. It packages familiar indicators into an organized framework with thoughtful confluence requirements, and the V4 delta fix addresses directional conflicts. However, the fundamental methodology remains indicator stacking without genuine predictive innovation. Past price data combinations cannot reliably forecast future candles regardless of weighting sophistication. The value exists in organized multi-time frame indicator monitoring and confluence discipline rather than actual next candle prediction capability. SMC target liquidity, V.35. Created by WhatTrader, this Pine script indicator tracks smart money concepts' liquidity levels by marking pivot highs and lows with session-colored lines, then classifying their violation as sweeps, fakeouts, or market structure shifts. The pivot detection identifies swing highs and lows using configurable lookback, then validates each pivot by checking whether price breached the level during confirmation. Only pivots remaining intact through verification generate horizontal lines, filtering weak levels that broke immediately. Session classification color codes each line based on formation timing. This temporal context helps identify which session's liquidity pools remain unswept. The 3-state classification evaluates price interaction. X marks sweeps where wicks touch but close back opposite side. SFP identifies swing failures, where close crosses with previous close on opposite side. MSS denotes structure shifts when close breaks through and continues across consecutive candles. Array management limits active lines to user-defined maximum, automatically removing oldest levels when new pivots emerge. The core methodology assumes institutional algorithms target obvious liquidity pools at swing points, oversimplifying actual market microstructure. The 3-state classification adds structure, but doesn't validate whether these patterns precede profitable trades. It executes session-based liquidity tracking competently with useful manual label controls and clean multi-state classification. The session color coding provides genuine temporal insight for Forex traders. However, it remains fundamentally a pivot marking tool with SMC terminology layered on top. The value exists in organized level tracking and visual session awareness, rather than confirming actual smart money activity. ADX volatility waves. Created by BOS Waves, this Pine script indicator fuses ADX trend strength measurements with Bollinger Bands to generate dynamic volatility zones that adapt based on directional momentum. It positions gradient-colored overbought and oversold regions outside traditional Bollinger Bands, with zone width responding to ADX values. The core mechanism calculates standard Bollinger Bands, then applies an ADX-based adjustment factor to the deviation component. When ADX rises, the multiplier expands bands to account for increased volatility during strong trends. Zone positioning starts at user-defined offset distance beyond smoothed Bollinger Bands, with width scaling as a multiple of the smoothed range. The gradient visualization divides each zone into 10 layers, with color intensity progressing from light to dark as price penetrates deeper. Signal generation triggers when price enters extreme zones after spending time in neutral territory. The cooldown parameter prevents signal spam by blocking new alerts until minimum bars elapse. During strong trends where ADX exceeds threshold, expanded zones acknowledge trending markets naturally push further into statistical extremes. When ADX falls below weak threshold, compressed zones reflect lower conviction environments where mean reversion becomes more reliable. Strategy development could incorporate squeeze detection that fires when Bollinger width falls below its 50-period average, signaling potential breakout setups. The smoothing length becomes critical for timeframe adaptation. Higher values create stable zones for position trading. Lower settings generate responsive boundaries for intraday scalping. It effectively combines two established indicators with thoughtful zone positioning logic and ADX responsive volatility adjustment. The gradient visualization adds useful depth perception for extreme conditions, while smoothing and cooldown parameters prevent common overbought/oversold signal problems. However, the fundamental approach remains derivative, and execution here doesn't introduce breakthrough methodology beyond aesthetic refinement. The edge comes from parameter tuning, rather than novel analytical insight. Pivot levels. Created by Big Beluga, this Pine script indicator plots multiple time-frame pivot highs and lows as horizontal lines with dynamic color coding based on price position relative to ATR-adjusted zones. The core mechanism calculates pivot highs and lows across 4 user-defined look-back periods, defaulting to 5, 25, 50, and 100 bars. The value when function stores exact price and bar index when each pivot forms, maintaining historical level tracking. The ATR-based color system determines line appearance by measuring current price distance from each level. When price sits more than 1.5 times ATR above a level, the line renders support green. More than 1.5 times ATR below displays resistance orange. Price within the ATR buffer triggers active blue coloring, signaling proximity. Line thickness scales with pivot period, making longer-term structural levels visually heavier. Real trading application centers on confluence identification, where multiple pivot periods align. A trader might notice 25 bar and 100 bar pivot lows converging within a few ticks while displaying active blue, suggesting strong support confluence with current price proximity. The color transitions from orange to blue to green provide entry timing signals as price approaches, tests, and potentially breaks through levels. Strategy development could use ATR buffer zones as no-trade areas, avoiding entries when price hovers in blue transition zone between clear support and resistance rolls. The multi-time frame structure enables filtering, only taking long trades at 50 or 100 period pivots, rather than scalping every 5-period swing. It executes multi-time frame pivot tracking with thoughtful ATR-based color coding that adds genuine decision-making value beyond static lines. The dual-line rendering creates professional visual hierarchy, while structured-type implementation demonstrates clean code organization. However, the core concept remains standard pivot identification with aesthetic enhancement. The ATR coloring adds utility, but doesn't fundamentally change how traders would use these levels. Order block footprints. Created by Algo Alpha, this Pine script indicator combines order block detection with volume footprint analysis to reveal institutional trading activity at key price levels. The detection mechanism tracks cumulative impulse distance for bullish and bearish candles, applying z-score calculation across configurable window to identify statistically significant moves. The footprint visualization breaks each order block candle into vertical price rows, distributing lower timeframe prints across these levels based on close price location. Delta values at each row are color-coded from bearish red to bullish green, creating a heat map showing where buying or selling pressure concentrated. TPO counts appear alongside gradient bars to indicate trade activity density. Absorption detection becomes the practical edge. When price revisits a bearish order block and the upper wick contains positive delta prints, the indicator flags potential absorption, institutional buyers stepping in against expected resistance. Conversely, negative delta in lower wick of bullish order block retests signals selling absorption. The percentage labels quantify absorption strength relative to total bar activity. The volume ratio bars split each order block horizontally to show up volume versus down volume proportion. Real trading centers on waiting for price to return to these zones and watching for absorption signatures. A trader might short into a bearish order block. The footprint rows reveal precise entry levels where most aggressive prints occurred. It merges order block theory with granular volume analysis, providing actionable absorption signals beyond basic zone marking. The footprint implementation adds genuine insight into order flow at institutional levels, though visual density and processing requirements limit accessibility compared to simpler order block indicators. The Z-score filtering removes much subjectivity from zone identification, while absorption detection gives traders concrete rejection signals rather than relying solely on price action interpretation. Need a complete system instead? Watch this breakdown of our two best free tools.